Hey, this is Danielle, and today I'm going to be talking about earnings destruction. So, we're entering the time frame before earnings, which is what I call entering the hot zone. The hot zone is going to be that pre-earnings time frame where you get a lot of momentum. If you look at this watch list over here, you can see this pre-earnings 21-day column. This is where you can see, many different stocks that have a high average in that 21 bar time frame before earnings. So, for example, Caterpillar over the last year, on average, it's traded higher by about 10%, which is equivalent to about $26. You got Chevron, Capital One, XOM, Google, MasterCard, FI, NUE, BA, lots of stocks, right, that historically trade higher going into their earnings reports. So that's basically a stat with an average over the course of last year. Now, I want to pick Enphase today because this one's a little bit unique because you can see that the average up here is actually very positive. The pre-earnings 21-day average is 9.36%. But you'll notice something suspect with Enphase, which is it had a phenomenal year last year, right? 23% move, 10% move, 8% move, 9% move, 8% move, all over earnings. And then you see what happened. We had a major trend shift. Um, we had major moving average crosses here and here. And what was really suspect was this quarter right here. This was going to be in February 23. I do not like this at all when you see a stock trade lower going into earnings. Then it has a big move on earnings, 8% up directly into a 200 simple, and boom, roll over and die. Then you have 2 quarters in a row, down 19% and down 10%. And what's bad about these is that not only did it fall 19%, but it kept falling. And then when it rallied and it tried to reclaim some of this, it hit resistance not once, but twice and rolled. Then you also have this other factor, which is where last quarter it gapped down yet another 10% on high volume. And not only did it gap down and keep going for 8 days after earnings, but it's continued to fall the rest of the quarter. Now we're at this time frame where we're within 21 bars. Prior to this earnings event, the implied volatility is expanding and we have a daily squeeze. So Enphase, used to be a stock that I liked a lot. I have the Enphase panels, so I was buying the stock for that reason. And you can see the way that it has just completely reversed. This used to be a stock that I would trade to the upside every quarter over earnings. And then I think I lost money on it. I'm sure it was this quarter right here. When the pattern completely shifted. And people say that like, oh, how do you know when to stop following the trend? The thing is I follow the trend until it ends. So there's always going to be a time where it's going to kick you in the teeth when you get that trend shift. But then you follow the trend the other direction. So when you're looking at this, I mean, you can see there's a pretty clear trend shift here. And we also have another sell setup. Now, when you're looking at this sell setup and you say, okay, well, you have another sell setup. What does that mean? Where could it go to? Well, when you're looking at these previous lows, you're basically on the dead lows. I mean, that'll bring you all the way down into this low from February 22. There was a slightly lower low, about $5 lower, that comes in from May of 21. But beyond that, I mean, here I'm going to have to change to a different chart time frame to even see where this thing could go. Let's see. Let's try a weekly chart. So looking at the weekly chart, I mean, you can clearly see that if this ledge breaks, I mean, there's really no support, right? So I don't know, down into the 70s. I'd really hate to say that, but that's that's really the only support that I have down here. We could look at a monthly chart, see if there's something better, but nope. We have a monthly squeeze firing to the downside as well. I will note that the monthly and the weekly squeezes are a little bit oversold, but that doesn't mean that there can't be more panic. So, what can you do with this? Well, I think it makes sense to target to 100. That's really the key psychological value that you have left. But beyond that, I mean, it really looks more like an earnings destruction ticker to me, which just means that it could really collapse. So What would a trade look like in this? Well, you're trading at 116.84. You have an $18 expected move going into the earnings series. That's also going to be the series where your implied volatility is going to continue to rise. So I think it makes sense to look at puts in this name. If we do, let's see, if it did like a Delta 70, it's going to cost like $16.70. That is pretty expensive, but it's also in the money. So it has, that real value behind it. If you wanted, you could do some out of the money puts for something like this. I don't mind that. I don't normally do out of the money puts or calls, but when you are trading in an earnings series, that's the series that has a rise in implied volatility. So I think it would be okay if you wanted to do that. Just keep in mind that those are going to be lower probability than the in the money Delta 60s or Delta 70s. So I think for a ticker like this, it makes sense to get short going into the earnings report. And then, of course, you want to think about where you'd want to have your stop. Now, it depends on how much risk you have on. Generally, with a straight put like that, I would have about a 50% stop, or you can use a spot on the chart, which I think if you're going to be a little bit more conservative, you'd want to use right around here, which would be about 123. But if you wanted to give yourself a wider stop, you'd really need to use 127.5. So either one of those price points I think is fine. And this would be for a trade, from now until earnings. Generally, I do not hold puts through an earnings report. That's because the implied volatility is going to rise and rise and rise. And then when you get to the earnings report, that implied volatility is going to get crushed. So you don't really want to hold those long options through the report, especially if they're making a lot of money. So generally like to take those off the table before the report. If I do anything else over earnings, I would add a separate earnings trade for the actual event. But yeah, beyond that, this has been my take on earnings destruction. If you have any other questions, or if you want to ask me about any other setups or follow me, you can find me right here on Twitter at Trader Danielle. Thank you very much and have a great day.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe and also give us a like and comment down below. If you want to learn more about us and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com where you can join us for more info. Thank you very much and have a great day.